a 5-hour trade. Not bad. Not bad. But we can do better. So, go to your lower time frames. And what you want to do is set an alert, right? So you set an alert on Filecoin at this level, right? And you'll be 31st of December 2020 until 8th of February. I mean, this takes a month and 2 weeks. This takes 6 weeks to play out that you're watching this form. So again, nobody here can tell me that they would miss this trade. The only reason you could miss this trade is lack of focus, because it takes 30 days, 40 days to play out. You have all the time in the world. So as long as you've got your systems, you just need to be patient. Now, you set your alert at this point. So if you imagine that we are, I should go replay again. If you imagine we're over here, you have your alert set on the blue line. Yeah? And we play on. And nothing happens for a few days. You're like, okay, cool. Check back in on Filecoin once a day. No changes, but it's moving up nicely. Oh, boom. There we get one. And in this day, your alert would ping. So I'll go back slightly. I will say here. Right, so Filecoin is pumped. The bands have gone green. Maybe we're going to get this breakout. So I'm going to go and look at this on lower time frames. I'll go to the 1 hour chart for this one, and you'll see why in a second. And you're watching Filecoin as it moves into its trend. So what you want to see is a strong impulsive candle with volume breaking out. Same rule, high, above average volume, breakout. The bigger, the better. That you want a candle that is wide range, high volume, full bodied, no crazy wick at the top, nothing too, a little bit of wick is fine, but nothing too crazy. And then action it there. So remember, your alert is set at the dotted blue line. Play it on. If you were watching this just in real time, you'd be like, oh, nothing's going to happen here. Just watch how quickly price can move. Whenever price moves, it moves. And away it goes. Boom. Massive candle, this one here. Enormous volume. Break out of range. And now the job is to get on board. So we'll go back to this. Sorry. Go back here. Right. So we had that 1 hour breakout, which is this one. There we go. You see this 1 hour breakout. This candle closes looking exactly like this does here, right? Now, the reason it's a 15 minute is because if you're using a 4 hour time frame, drop down by 1. So 4 hour, drop by 1. 4 hour, you get 4 1 hours. A 1 hour, you get 4 15 minute candles. You want to get more data because you want to get these EMA bands. You want to catch the lower trend for the immediate continuation. So if you use a 4 hour, use a 1 hour. If you use a 1 hour, use a 15 minute. If you use a 2 hour, use a 30 minute. You can do whatever you want. I like 4 hour, 1 hour. I like 1 hour, 15 minute. You can do anything you want. Just make sure that your second time frame is lower. It doesn't have to be exactly a quarter, but it can be whatever. Something like that. It tends to work pretty well. And so it's broken out. What do? We get on the 15 minute. Right, cool. There's our 15 minute. Now we're getting our bands. So we're going to wait and watch and see what happens. Oh, it starts to consolidate. Very nice. Is it going to hit the bands? We get an entry. No, our impulse is away on us. Didn't touch the bands. Oh no, false signal, can't get in, no good. What can we do? No, not true. It held the bands, right? It held them. It held at the bands. It impulsed up. It did a very nice low volume correction. Remember the trend, nature of a trend. High volume impulse, low volume correction with declining volume. It didn't exactly perfectly wick into the bands, but it's functionally identical to the previous one, except for that little wick into the band itself. Okay, so where do you get in? You can get in on that breakout. That breakout is the breakout to buy, right? You can also, if you understand this, if you understand what's happening here, like we did with the Solana example, you can buy into this breakout as it's happening, right? That would require going to possibly a lower time frame or buying in after this one when you see a full retracement of this attempt to sell off, fully retraces, moves up, and as this one's breaking out, you could add your first quarter. So either choice is valid. You wouldn't get it at the lows, but you would buy it as it's maybe going above this high or as it's going above the high itself, right? You could buy it there, or you could buy it on the breakout, or you could buy it at the actual high, just on the candle close. Because that candle close, another strong one with rising volume, that's volume harmony, strong continuation signal, and then away you go. And then we'll watch this one play out as well. Where is our invalidation candle? It is down here, right? Is that, where the fuck? This should be it. Let me see. It's dragged way along because it went from the high time frame to the low time frame. Oh, fuck it, I'll draw another one. Your impulse candle is this one. The first big one, below that, that's your invalidation. Right? Back to the 15-minute where you're doing your execution. And let's let it play out. And so same thing. You just allow it to play out. And now you can be looking at, if you're not fully in, then keep your eyes on the bands. So we do get a touch of the bands here after. So maybe you've already filled some on this second leg and you want to add here. That's a touch of the bands. Bands are holding. If you want to be extra careful with it, wait till the bands are inflecting up. So any of these candles, when the bands are rising up, you can add, let's say you put half your position on there. You can put the other half your position on here, right? In any of these, depends on your risk tolerance, but you know, any of these candles, especially when you see inside candles about after this breakup, all of these are valid. Let's just say you put it there, right? Remember, you're now riding, because it's a 1 hour chart, you're now riding the 15-minute trend. That's what you're trying to do. You're riding the 15-minute trend. Let it play on, and then we'll zoom out after. Right, so now you're filled. Right, you're filled here, filled here, filled here. Nice consolidation. Price is pushed up. And all your buys now, 1, 2, 3, they're all in profit. Market's agreeing with you. Your invalidation is nice and far away. And again, now you want to get off the 15-minute chart once you've executed, because this is not a chart that not a trade that you're watching on the 15-minute. This one, you want to go to a 1 hour or a 4 hour. Up to you. Remember, it's a swing trade. So we've just seen a significant breakout on Filecoin, right? We've had a breakout of a range that went from December to February. 6-week breakout. So you can watch this on the 1 hour bands until they break. But you can also watch it on the 4 hour bands and see how they go. Because this is a very strong breakout. So up to you. If you're using the 1 hour for the impulse, we'll just keep it consistent and say I use the 1 hour to watch the bands. And we'll see here. What's going on? Why have my bands disappeared? Trading view is rugging me. There we go. There's the 4 hour. There's the 1 hour bands. I don't know what trading view is doing there. And we let it play out, okay? Away it goes, fucking off to the moon. Now, the bands will go red. That's right. So here we go. So the bands go red there. So now you've got a question. Because you entered on a lower time frame, you've got to question yourself at this point and say, right, the 1 hour bands have gone red here. So I could exit my swing trade here. Or I could defer to the 4 hour and see, is it still intact? Now you notice that it's actually the first touch of the 4 hour after a valid breakout. I don't need to tell you guys how bullish that is. The first touch of the 4 hour after a strong breakout is generally super bullish. So would you need to close because of the 1 hour? No. That's an example of where you can be too zoomed in. So your execution on the 1 hour was fine. Your execution on the 15-minute was fine. And then you got rewarded with a massive move. So now you can say, all right, well, I'm going to hold this until the 4 hour trend weakens. And let's see if that gets you a better. And also, by the way, backtest this, okay? So here's where your exit would have been if you exited on the 1 hour. If you exited on 1 hour bands. And this is what you should be doing with backtesting too. Backtesting optimal exit points. There's where you would have exited on the 1 hour bands. Let's play out the 4 hour trend. And so the 4 hour trend actually breaks down there, which is ever so slightly higher. So you get a better exit on the H4 bands there. Right? And of course, you can go beyond this, because what you're trying to do is catch big swings. What if the 12 hour is still intact? And you can do this with the Solana example as well. What if the 12 hour is still intact? What if the daily? Have we touched the daily? We've had our first touch of the daily bands. You all know how good that is from the last lesson. First touch of the daily bands often leads to a new high. So do we want to exit here yet? I mean, we could. And if we exited here now, we'd be having rough entry around there, rough stop loss around there. We would have a 2.3, we would have a 3. So that's a decent swing trade. That's not bad. However, we've done the work to get in on the low time frames. We've been rewarded with a strong move. Do we want to ride the daily trend? Let's see. In this example, invalidation is still completely fine. We had a nice little shakeout. Daily bands never lost their trend. And away it goes. And away it fucking goes. So, how would that look if you waited for the daily bands to break? You catch the whole bull market. And they break up here. So that's an example of the fractal nature of markets. Daily bands. And how being too zoomed in, zooming in is absolutely necessary if you want to get tighter entries. Think of all the people. Look how, when you look back here, imagine being that guy that got his entry down here, had his invalidation over there, and is now sitting in a 20-hour profit, happily closing because these bands have crossed. Well, that's how you do it. Lots of patience. Triggers on low time frame. Entry on a lower time frame than that. A lot of patience. And then if you are rewarded with a strong trending move, refer out to your higher time frames and see, wait a minute, I know I'm very zoomed in. I'm on the 4 hour chart. I want to take profit on the 4 hour chart. But wait, has something else formed? Yes, actually, a daily trend has formed. And then we play it all out. And I think that was probably the best entry. And look at where it goes. All the way back down. Right back down. Probably, would it hit the stop loss? No. Retraces all the way down. So, there you have it. That is entry methods number 2. Using just the EMA bands, 1221, with 2 time frames to catch impulses, early trends, and then if you're right, which it won't be every time, of course, nothing's 100%, but if you are right, you're going to get rewarded with excellent entries, and you're going to be able to catch some of these massive swings. Now, here's the point. I know the temptation is going to be to go for those big swings every single time. That's just, that's just human nature. You can choose to do that. But what I suggest and I encourage very strongly is that you stick to whatever your plan is. You stick to the rules. Yeah. And for almost everyone, guys, I don't think anybody needs to go below a 15-minute chart in their entire trading career if they don't want to. I do it for day trades and scalps. I do not do it for swing trades, position trades. Because you're going to miss the forest for the trees. Too many people think that you have to be on the 1 minute chart to catch like a 20-hour trade. You have to nail a low and then ride it. You don't. There's a 20-hour trade caught by executing on the 15-minute chart, having a sensible stop loss at the invalidation, and then referring to your higher time frames once you're right. It's the way it builds, the fractal nature of markets. Zoom out, zoom out, zoom out. So that's the lesson, GM. Hope you enjoyed.